Hi there, welcome back to Dukascopy TV. I'm Ben Jones. On the line with me to discuss Australia and its link to the Chinese slowdown throughout 2015 is Sian Fenner from Oxford Economics. So to begin with, Sian, let's look at the inflation rate that's been released today. It stands at 1.7%. Were you expecting a figure like this, and will Australia be content with it?
Today's step down in headline inflation was broadly to be expected given the sharp fall that we've seen in fuel prices in the December quarter. And if we look further ahead, actually oil prices are already down 29% in Aussie dollar terms this year. So it's fair to assume that actually inflation is probably going to remain below the RBA's 2 to 3% inflation target in Q1, and it could actually even be lower, remain around these levels, possibly further out. In terms of what this means for monetary policy, though, unless we see some more broad-based easing inflation pressures, we expect the RBA will look through the impact of the fall in oil prices. They've done this before when we've had previous temporary price shocks, for example, when we had high and then falling banana prices. But what the RBA is likely to take away from the CPI figures is that, aside from oil, inflationary pressures are also benign. And while we don't think this warrants a further rate cut, there is indeed no need to hike interest rates anytime soon, particularly as we expect the Aussie dollar will actually continue to come under some downward pressure this year. So it'll be able to do some of the heavy lifting in supporting a recovery in the non-mining sectors.
Now, business confidence was released yesterday. It's gone up slightly, but only reached a figure of 2. What does this mean for the Australian economy?
Yes, well, confidence did increase slightly, but there's really little to cheer about. It's still slightly below its long-term average, and I think what's sort of worrying is that the employment component did soften. This is a concern given that we already have subdued labour market conditions, which we're hoping to improve as the year progresses. I think what also the survey does really highlight is that there really is a divergence between the sectors. Unsurprisingly, given the fall in commodity prices, the mining sector confidence has fallen sharply. But we've had some other sectors which have been more positive, more on the transport and utility side. So really coming from this sort of survey sort of supports our view that we're going to have diverging growth performances across different sectors continuing this year, but we're still looking at a period of sub-trend growth.
And finally, can you discuss the impact that you think the Chinese slowdown will have on Australia throughout 2015?
Okay, well, China is clearly Australia's top export destination, and it also actually has an impact on commodity prices as being a large importer of key resources. So the slowdown in China will affect Australians broadly 2 ways. It's going to impact the export volumes and commodity prices. And indeed, part of the concerns over the extent of the slowdown in China is part of the story behind the fall in commodity prices that we've already seen. So what does this mean for Australia? Well, it means a lower terms of trade and the prospect of weaker profits and wages. Now, this is coming at a time when the economy is already experiencing a sharp drag and growth from falling mining investment. Now, while there's slower demand for China is a headwind for the export outlook, we do actually see some positives for some other of Australia's major trading partners. In fact, actually the other top 5 trading partners are set to improve. In particular, prospects in India have improved markedly this year. And indeed, we're looking at India to be growing stronger than China in 2016. So as a key export destination, this improvement in India's growth will provide some support for exports against a backdrop of slower Chinese economic growth.
Sian, thank you once again for joining me. That's all we have time for now. Keep clicking back to Dukascopy TV for plenty more exclusive interviews. Bye for now.